Hi everybody, it's Julie Sharamito here with the Mortgage Advisors for your Mortgage Minute Special Edition for the pandemic that we're experiencing with the coronavirus, and some things that you should know about how the mortgage industry and your mortgage in particular are being affected and what we can do. So first and foremost, I wanted to reiterate that I'm here to help. So if you have any questions, concerns, or anything, this is an unsettling time. It's unprecedented and we're taking it day by day, but I am certainly available to you. You know where to reach me, phone, email, fax if you like. But more importantly, what to do if you're affected and you cannot make your mortgage payment. We do have lenders offering up to 6-month deferrals, and if you need it, please call and request it. The interest is still going to continue to accrue, and the long-term game here is to be determined. They might end up requalifying you if they want to, if you need to extend your amortization. But if you just have that add on to what you owe, it's called capitalization, then it's just going to increase how much you owe, but it's going to provide that cash flow relief that you need right now if you do find yourself affected by job loss. So please call your lenders if you need help. Please call me if you need help. If you don't, though, if you are still working and still collecting an income and you're not sick and you're not caring for somebody who's sick, then the lenders are pleading, please don't request the deferral. The reason being is that they're being inundated with calls, and the resources that are available are there really to try to help the people who do need it. So number one, if you need help, absolutely. If you don't, please hold off, and we'll cross that bridge if and when we need to get there. But right now, stay the course. It's all going to be okay, and most people are going to be okay without the relief. If you need the relief, it's there. Second thing is, if you have an upcoming purchase or something happening with your mortgage, like a refinance, it is imperative that you keep me posted of any changes. If you do experience job loss and we can't get a current pay stub and job letter to support your income, that could potentially put your mortgage in jeopardy. Now, not to create fear and havoc, I think most people, again, are okay with this. When I looked at my upcoming closings, most of my clients are still working, and so it's okay. However, please do keep me posted of any changes, because that can potentially impact things down the road. We're waiting to see how appraisers and lawyers are going to be able to adjust to this changing landscape, where we may end up having to be in our homes and not outside doing non-essential business. So right now, everything is good. Appraisers are still going out, lawyers are still closing homes, and I'm still arranging mortgage closings. So keep on top of it if there's any change, but if you want to look at options, I'm still here. The third thing is, sorry, this is a very long video, but mortgage interest rates. Everybody saw them come down, and they plummeted. Then the Bank of Canada cut unexpectedly that full 1% in the last few weeks. That created a bit of a frenzy, which is fair. A lot of people looking at whether or not their mortgage was meeting their needs and whether or not they should be refinancing, securing a good interest rate for their purchase. All of those are really good things. However, in light of the financial uncertainty that's created from this pandemic, the banks and lenders are looking to stay liquid. And that means that they know that they need the cash for whatever, they're going to need to do with it. That means interest rates have actually gone up. We have seen the discounts off of prime rate for variable rate mortgages get slashed, and the fixed interest rates have increased by 0.75% on average. It's been quite high in the last week. They're still low though, and that's something we need to remember, is that in the 3% range, you're not paying a high interest rate. It's just higher than it was last week. And banks are anticipating more defaults and things like that. So their risk has gone up, and as a result, their rates are going to go up too. This happens anytime we have this kind of financial uncertainty. So keep that in mind. It's a lot to digest, but the takeaways are, if you need help, ask for it. I'm here. The lenders are here. We'll figure something out. Number two, If you have a purchase coming up or something happening with your mortgage and there's any change to your job situation, please let me know. And number 3, interest rates have gone up, so don't be too surprised if the numbers aren't quite what you were expecting, but we're still in historically low environments and things are still carrying on. Stay happy, stay positive. It's sometimes hard, but you get up and you do every day and just wash your hands a lot. Take care.